Cardano ADA secretly dependent on Bitcoin BTC. Cryptocurrency investors see vast potential in the so-called Ethereum killer. We have some news on the coin, and hopefully all your questions on the correlation between Cardano and Bitcoin will be explained. What do you think about this relation we're about to explain? Stick with us to the end to see it unfold. Hi Cardano lovers, welcome back to Cardano Land, your daily dose of Cardano. If you're interested in everything around Cardano, this is the place for you. Make sure to hit the like button and subscribe for us to provide you with more Cardano news. And let us know in the comments how much you think Cardano will cost next year, month or week. Let's get to it. Please note that we are not financial advisors, and hence please do your own research before any investment and so on. First, let us talk about Cardano a bit for the newbies. Cardano is a blockchain platform centered around Ouroboros. Ouroboros is a pioneering proof-of-stake protocol that immediately distinguished Cardano from previously invented cryptocurrencies that instead relied on proof-of-work protocols. This difference is key to Cardano's value proposition. Also, it's important to note that Cardano is the name of the blockchain platform, while ADA is the name of its native cryptocurrency token. Cardano's ADA token in turn takes its name from mathematician Ada Lovelace. Cardano earns all its comparisons to Ethereum. For one thing, Cardano's founder Charles Hoskinson was a co-founder of Ethereum. However, he had a falling out with Ethereum's key person Vitalik Buterin. Hoskinson wanted to lead Ethereum in a more commercial direction and accept venture capital, whereas other Ethereum founders wanted to take a less business-centered approach. Cardano seeks to offer many of Ethereum's most compelling capabilities, such as robust intelligent contracts. Meanwhile, Hoskinson designed Cardano from day one to be energy efficient and support fast transactions with minimal transaction fees. Additionally, for the hard money enthusiasts, Cardano has one other big perk. It has a strict cap of 45 billion coins outstanding compared to Ethereum, which has absolutely no limit to its total eventual supply. Cardano has been quite successful. It's currently the 5th largest cryptocurrency by market capitalization. The programming community for Cardano is active, and the project has drawn particular interest in 2021 as crypto's environmental impact has come to dominate the discussion. The coin will soon implement smart contract functionality, which essentially means adding code that enables automated self-executing contracts. Smart contracts allow developers to build apps on top of blockchain platforms, such as Ethereum's enormously popular Uniswap decentralized exchange. The entire decentralized finance DeFi industry is built on smart contracts, much of it on Ethereum, and Cardano's about to join the party. Ethereum's blockchain can only handle a minimal number of transactions right now, around 15 per second, which has led to immense congestion on the network. That means longer wait to complete transactions and high gas fees that you'll pay to send them through. Future network upgrades should ease that pain, but Cardano is already primed to handle much larger volumes of transactions. It has been tested up to 257 transactions per second. Still, Cardano developer Input-Output is looking into many vast tallies, potentially as many as 1 million or more transactions per second. Both Bitcoin and Ethereum are based on energy-intensive proof-of-work systems, which require miners to use powerful computers to solve complex math equations, all hoping to win some cryptocurrency for their efforts. It's part of the reason why the crypto market is down so much lately, after Tesla decided to stop accepting Bitcoin due to the outsized environmental impact of mining. Luckily, Cardano has a much more eco-friendly proof-of-stake system, in which validators hold their coins within the network to participate and earn rewards. According to Cardano founder Charles Hoskinson, the network is 1.6 million times more energy efficient than Bitcoin. That might seem like an impossible figure, but it speaks to the overwhelming amount of energy needed to power Bitcoin's network. It's something that crypto newcomers are surely keeping in mind as they plot potential investments, and Cardano offers a better path forward. As a third-generation blockchain network, Cardano has learned from the missteps of its predecessors to try and create a more effective, economic, and energy-efficient system. On top of that, it's also based on peer-reviewed scientific research, with ample time and energy put into exploring the technical possibilities within. You might call it the opposite of Facebook's classic "move fast and break things" motto. Some would say that's why Cardano has been slow in implementing features like smart contracts, but it could assuage some investors' fears given the already volatile nature of cryptocurrency. If bullish cryptocurrency analysts are correct, then the entire market may have plenty of room to grow in the years and decades to come. But the days of buying a single BTC or ETH for a few dollars and watching it grow into thousands are long gone. Could Cardano's value ultimately lift off into the stratosphere as those coins did? There's no telling for now. But the fundamentals behind Cardano appear to be strong. Given the current low price per coin, many investors see it as a worthy long-term bet on a promising cryptocurrency project. Bitcoin has long been glorified as being the dominant crypto asset, yet its share of the overall crypto market capitalization has recently declined. From standing at around 70% at the start of the year, it has since fallen below 50%, highlighting how other crypto assets are increasingly starting to take a more significant share of recent gains. The logical extension of this decline in dominance is that correlations between Bitcoin and other coins have also begun to subside. As far back as a year ago, pretty much all the leading crypto assets correlated with BTC of 0.9 and above, 1 being the maximum. But in recent weeks, this figure has sunk below 0.3 for many of the top 10 cryptos. Opinion among analysts regarding this decline is mixed. While some claim it's the temporary result of an expansionary bull market, others say that declining correlations represent a fundamental shift in the industry. Other coins beyond BTC increasingly prove their value propositions to investors. If you rewind to the end of April 2020, Ethereum, XRP, Dogecoin, and Cardano were all heavily correlated with Bitcoin at ratios of 0.95, 0.92, 0.91, and 0.95 respectively. Whenever Bitcoin rose or fell in price, they all did the same, with their movements arguably a little more than an expression of Bitcoin's performance. There was gradual subsidence until July/August, when Bitcoin prices began rising, leaving many altcoins behind. Despite a recovery in correlations in October, things began to drop again from November, when Bitcoin's bull run really started picking up momentum. Again, there was a partial recovery leading into January of this year, but correlations have been falling quite heavily since February. This was precisely when numerous altcoins began making up for lost time, rising in price as many bullish investors were looking for the next big thing. The weakening correlation between major altcoins and Bitcoin in a bull market is not new. As ETH and top altcoins rally during bullish spells, they often post higher returns compared to BTC, which in turn causes the correlation to drop, said Robbie Liu, a market analyst at OKX Insights. Liu noted that pretty much the same phenomenon was observed during the 2017 to 2018 bull run. The most notable example was in January 2018, when the correlation coefficient between BTC and ETH fell from above 0.8 to a negative value, he told CryptoNews.com. Nearly every analyst agrees that the drop in correlations is essentially the product of the current bull market. In the early 2017 bull market, Bitcoin led the pack early on, but as investors gained confidence in the longevity of the boom, they increasingly looked to invest in smaller cryptos, which started to push those prices up faster than Bitcoin's. It's the same story again in 2021, said Glenn Goodman, a crypto asset analyst and author of The Crypto Trader. Regardless of how permanent the shift is, analysts agree that it's suitable for traders and investors, given that declining correlations provide them with the opportunity to diversify. A decline in correlation should be a most welcome development, as it opens up more opportunities to trade into different value propositions within the emerging space, said Joel Kruger. Assuming that the divergence in correlations persists into the future, this would ultimately be a win for traders, investors, and the wider industry alike. According to the correlation analysis, BTC and ADA have a solid positive relationship. The correlation coefficient of their prices is 0.75, which was computed based on the last 100 days' price movements of both assets. This coefficient may vary from -1 to 1, where -1 is the strongest negative correlation, 0 is no correlation at all, and 1 is the strongest positive correlation. The negative coefficient shows that the prices of the assets are moving in the opposite trend, while the positive coefficient indicates that the prices are moving in the same direction. For example, if Bitcoin and Cardano connection is positively strong, it means that when BTC is growing, ADA will grow as well. The strong negative relation will show that when BTC is growing, ADA price will be in the opposite, lowering. The knowledge of the correlation coefficient helps to determine in percentage the influence of Bitcoin over Cardano. If we take all the things affecting the price of ADA as 100%, then the share of BTC price among these factors will be 56.25%. The other part, which is 43.75%, covers all the other things such as media, events, or regulations. Because Bitcoin's been trading sideways over the past several weeks and is currently showing some signs of weakness, this decoupling trend will likely persist if Cardano can shatter its near-term resistance. It remains unclear as to whether or not ADA's strong uptrend will be able to extend further if the aggregated crypto market sees a violent downturn in the days and weeks ahead. Well, that's it for today's video. Hope this cleared all your questions on the correlation between Cardano and Bitcoin. Let us know in the comments below what you think about the correlation between the coins. And make sure to subscribe and give us a thumbs up. See you next time at Cardano Land.